Hey, good morning, everyone. I call to order this meeting of the Finance Committee for Thursday, November 6th, 2025. And to begin with, as is our custom and also as is the right thing to do, we must first turn our attention to the fact that these lands have been lived on for a millennia, long before we were here. And as stewards of this land ourselves, we need to acknowledge that. And so I acknowledge that we are on the traditional and historic lands of the Treaty 7 territory, which consists of the Blackfoot Confederacy, the Siksika, Piikani, and Kainai, the Tsuut'ina Nation, and the Stoney Nakoda First Nations, Bearspaw, Chiniki, and Good Stoney. This is also the territory of Métis District 4. And as we are all treaty people, we all have obligations to one another and to this land. Now moving to the agenda, I will move approval of the agenda for the November 6, 2025 Finance Committee meeting is circulated. All those in favor? Carried unanimously. Got to get used to where my councillors are, so very good. Now we'll move on to item C1, minutes of the April 22nd, 2025 Finance Committee meeting. Any errors or omissions? Councillor Graham?
I always find it really odd that we get these a year later and then we're asked to, was this correct?
Yeah.
Is there any other way that might be better?
Well, first of all, it's much less than a year. That's the April 22nd minutes, and we just go to the next meeting.
Yeah.
I think the only other way that the Finance Committee can approve it is to call another meeting.
Finance Committee.
In which case, there would be minutes of that meeting showing approval, and then we'd have to call another meeting in order to approve those. So let's just keep it as is. Any other errors or omissions? No, actually not anymore. Actually not, actually. So I'll move approval of the minutes of the April 22nd, 2025 Finance Committee meeting as circulated. All those in favor? Carried unanimously. Okay, we'll get right on to the business for today. And first of all, turning to Ms. Gibbons for the report on the auditor appointment.
Sure. So I was actually going to, there we go. Thank you. Just talk a little bit, since this is our first Finance Committee with respect to the 2026 budget amendments. I was actually just going to run through maybe a bit of a less formal version of what's in front of you to give you a bit of taste of what to expect today. So as Mayor Krausert was just alluding to, we're going to start with the auditor appointment. Little bit of a formality, and then I will hand it over to Ms. Lutz from Avail CPA to do her pre-audit report. Virtually joining us will be CIBC Wood Gundy, our portfolio managers, to provide a 2025 economic update, just as a little bit of an introduction to our budgeting process and what's happening on a more macroeconomic scale leading into our process. And then we'll get into kind of the true budget amendment process. I'll do a little bit of an introduction about what that amendment process was. Then I'll hand it over to a key new member of my team I'll introduce to do our 2025 operating year-to-date financial report. We'll run through the impacts on local governments from provincial changes, a wordier but more encompassing language to talk about, really that's that provincial downloading. That's how we used to refer to that report. Then we'll get into our 2026 operational amendments, some options to consider for 2026, an update on our total debt servicing reserves, and unfunded capital projects. Again, our operating budget directly impacts our capital budget, and also it's a nice segue into the content we'll be covering at our next Finance Committee, which is more focused on those capital items. And we'll conclude with a discussion on the livability tax program 3-year budget. So that's the overall plan for this morning. So first up is that auditor appointment. As some background, Avail CPA, and some of those of you who've been here a while may recall they used to be YPM, but they've been our auditors for the last, I think, roughly 14 years. Our current contract ended with the last fiscal year audit that was completed this spring. And so to select our audit firm going forward, we did go to market and do a request for proposal for external auditing services. In the late summer, we issued that RFP on our town website in Alberta Purchasing Connection. We received 4 responses which met the requirements that were outlined in that RFP. An evaluation team composed of members of our finance department then evaluated those responses based on some criteria, which included their ability to meet our mandatory requirements, such as our insurance requirements, price, and also the proposed auditing approach. The team, which could include partners, supervisory, and staff, qualifications and experience, references, and the firm philosophy, which could include culture, customer service, items of that nature. Avail CPA had the highest ranked response based on kind of 4 main factors: their continued strong emphasis on customer service, their demonstrated understanding of our specific organization and the environment we operate in, their specific approach and proposed approach to the audit, I should say, and the competitive pricing that we've received from them. And just building on that more, we've been really happy with the service they've provided. So the authority of the Finance Committee, as outlined in the Finance Committee bylaw, includes the appointment of the town auditors. So with that, we have the following recommendation: that the Finance Committee appoint Avail Chartered Professional Accountants, CPA, as the external auditor for the town of Canmore for the fiscal years ending December 31st, 25, 26, and 27. Any questions on any of that? Perfect.
Okay, so I will move that the Finance Committee appoint Avail Chartered Professional Accountants, CPA, as the external auditor for the town of Canmore for the fiscal years ending December 31st, 2025, 2026, and 2027. In speaking in support of that motion, I have been involved in many meetings with Avail over the years through multiple organizations, and I have always found that their information and their dedication to whatever process they're involved and their customer service has been excellent. And so I certainly support the continuation of using this firm for our audit. Anyone else wishing to speak to the motion? Councillor Marin?
Yeah, I just have a question. Is Avail local? Like, are they a Canmore firm?
No, they're out of Lethbridge.
Okay.
They serve a number of municipalities in Alberta, and they've served a number of organizations, municipalities within the Bow Valley.
Okay, and I'm just curious, with the RFP, did we receive any applications from any local
No, we did not.
options? Okay, just wondering. Thank you.
It's what you'll find in the legal realm. Municipal financial audits are a niche, just like municipal law and whatnot. So, good question. Councillor Ma?
Happy to support your motion, sir. I just think Avail's been really great. I think that long-term history with the organization is invaluable. Seeing how they've worked with CCH in the past as well is great, and Ms. Lutz, and wherever Calvin is in the universe. Just want to say thank you.
Yeah. Thank you. Okay, seeing no one else wishing to speak, I'll call the question. All those in favor? Carried unanimously. Okay, we'll now move on to item, by the way, the closed session is just an editorial thing. It's marked as D1, but it's actually for D2, or no, this is D2, which is now what we're going to have is the pre-audit report. And there'll be a presentation, and at some point we'll be advised to go into the closed session.
Correct. So now that they've been appointed, I'll hand it over to Ms. Lutz to do the pre-audit report, and there will also be the opportunity for a closed session without administration present at the end for Finance Committee members to have a conversation with her.
Welcome.
Thank you for having me today. And also thank you for the appointment as auditors for the next 3 years and the kind words said about Avail. I truly appreciate it. To formally introduce myself, my name is Michelle Lutz. I'm an audit partner at Avail CPA, and I lead our audit division at the firm. My presentation this morning is going to summarize the pre-audit letter that we send out to the town at the beginning of the audit, and essentially summarizes the scope of our engagement along with our audit approach for the 2025 fiscal year. So we have been engaged to audit the consolidated financial statements for the year end December 31st, 2025, with the consolidated financial statements that will include the town and also 3 related entities that the town controls by definition of the handbook. We'll also prepare the income tax return and related schedules, and then we'll perform a review engagement for the family and community support services. The pre-audit letter, under the purpose and scope of the examination, it will highlight that management is responsible for the financial statements. We always like to emphasize that these are management financial statements, and we're here to provide an audit opinion on them. It will note council is responsible for management oversight, and then Avail's responsibility as the auditors is to assess the risk of material misstatements. And I will define what material means on the next slide. Often you'll hear us auditors say materiality, material, is it not material? Very often, it's just part of our day-to-day vocabulary. We are to understand the town's internal controls. We evaluate the accounting policies and estimates used in the financial statements just to ensure that they are consistent with the accounting standards and that they're consistently applied. We'll conclude on the going concern assumption. So that's just the ability of the town to continue to operate for the foreseeable future and never any concerns there. And then we evaluate the overall presentation of the financial statements in accordance with the Canadian public sector accounting standards. Once we're able to check off each of those items, we are then able to come to our audit opinion and issue it at the conclusion of our audit. So for our audit approach, we use what is called a risk-based approach, where we focus the majority of our work on areas that just have a higher risk of being materially misstated. So for the town, that will be the tangible capital assets, deferred revenue, net assets, and the asset retirement obligation. The reason why these areas are considered higher risk is just due to the accounting being more complex by nature. Also, the dollar amount associated in these areas are quite high. So what's common across all municipalities is tangible capital assets is going to be one of your biggest line items on the town's books. And that's just due to the infrastructure that the town needs to maintain. So a big part of our audit is focused in auditing such areas just to be able to conclude that it's reasonable, that it's free from material misstatements. With that being said, we're always given sufficient detailed support from the town when we're auditing these areas, and we rarely do any adjustments when it comes audit time. Next is going to be materiality. As mentioned, we use this term quite a bit. By definition, it's a term used to describe the significance of a financial statement item to a decision maker. So an item is going to be considered material if it's probable that its omission or misstatement will change a decision at the end of the day. So the materiality threshold for the 2025 audit has been set at 2.4 million, which is the same threshold that we used in the prior year. With that being said, we will take percentages and fractions of that materiality threshold in guiding our work during the audit. So we are reviewing a number of transactions significantly below that threshold, and then we'll also complete random sampling as well, regardless of dollar value, just to ensure that there's a balanced approach there. And then for our audit approach, we have three main types of procedures that we use. The first one is going to be the test of controls. So this is where we test the key financial controls of the town just to ensure that they're operating the way that they are intended to. When controls are operating effectively, it reduces the risk of errors within the town's financial data. We also do test of details, and this is a big chunk of our work. So that's where we're taking source documents and agreeing it into the balances and transactions during the year. And then for substantive analytical procedures, those will just allow us to conclude that the recorded amounts are reasonable and within expectation. So the finance department gets a lot of questions from us asking why balances have increased, decreased from prior year. Why is it higher or lower than budget expectations? Earlier it was mentioned that we have a niche market of municipalities. We audit about 20 municipalities plus in addition to their related entities. With that, we're able to kind of do a health check across our municipalities saying, hey, asset retirement obligation is coming in. This is what other municipalities are seeing. Are we seeing it here? And then we're able to narrow it down. Should we be seeing it or should we not based on certain circumstances? So it does help having that breadth just to see the commonalities amongst the municipalities within Southern Alberta. And I'm just going to pause there for a moment because this has been very heavy audit technology before I proceed. Has there any questions so far? Okay. Okay, perfect. So next slide is just going to be a bird's eye view of the audit process from beginning to end. At the very top is the pre-audit meeting, so that's me here today presenting to you. Then to the right, we're going to be moving into some of our preliminary work. So that typically happens at the beginning of December, where we'll be in contact with the finance department, go over our preliminary audit questions just to get an idea as to what has happened over the last fiscal year, and then we'll begin some of our preliminary testing of transactions at that point in time. Then, as the year end passes, we'll get the finalized numbers from the town, and we will develop our audit plan from there. It takes about a week to develop the audit plan and have it formally approved. Once it's approved, we then begin to execute on that audit plan, which brings us to our field work. At that point in time, we're ensuring that the three related control entities, that the field work is also being performed at that point in time, because we will have to consolidate the four entities together. Once we do the consolidation, then we present to council, and then after the council meeting, we will finalize, get everything signed and filed off. So typically the dates for that is fieldwork happens during March, council presentation is at the end of April, and then we have to submit everything to municipal affairs by May 1st. And then for the last items in the pre-audit letter, it has a section on illegal acts, intentional misstatements, fraud, and errors. In that section, it will note that we aren't hired specifically for a forensic audit or a fraud audit. We are hired for a financial statement audit. So when you look at cash on the town's financial, that you know that that is free from material misstatements. So our audit procedures are very much designed for a financial statement audit and not a forensic audit. However, if we do come across anything unusual or of concern, we will bring it up to council and the proper avenues at that time in the rare instance it was to occur. There was no major issues discussed with management prior to our appointment as auditors, and at the conclusion of the audit, we will be requesting written representation from management that they have fulfilled their responsibility in regards to the audit. So essentially, they're signing off that they have provided all of the audit working papers and answered all of our questions to the best of their knowledge, and nothing was meant to be misleading to us. And then the last item is our auditor's independence. I can confirm that Avail is independent of the town and all of its representatives. We always have to go through an annual exercise where we list all of our insurance clients that we have at the firm. We have all of our employees review that list just to ensure that there's no threat of independence with any of our insurance companies or even perceived threat of independence, even though we would be on side. That perception is always important to maintain as well. So again, we are independent. So that concludes the key items in the pre-audit letter that I'm to bring up this morning. I'll pause for question, but my next step, I will need a moment with council in camera without management present, and that's just part of the regular process in accordance with the Canadian audit standards.
Great, thank you very much. I will then move that the Finance Committee close the meeting to the public to prevent the disclosure of personnel evaluations in accordance with Section 20 sub 4 sub G of the Access to Information Act. All those in favor? Carried unanimously. All right, I'm just getting the word when we're streaming again, then we'll move on to item D3. All right, we're back. We're out of closed session, and we'll now move on to item D3, which is 2025 Economic Update Verbal Report.
Yeah, are they online with us? I turned it off for the closed session, so I gotta turn it Oh, sorry, yeah, okay.
We'll just wait. We're going to be joined virtually by Wood Gundy.
I don't have their slides, so I think everything will need to be run by them, if that's okay. I just had a placeholder. Sorry, should have clarified.
It's a little Inception-like, yes. There we go. Okay, and we see James there.
Should I disconnect? Is that making it extra complicated?
Way to test and see the sound. Yeah. Hi, James. Just wondering if you can hear us.
Yes, we can. Thank you very much.
Excellent. Well, welcome. And
Thank you all very much for having us.
You have our attention, and the microphone is yours. So I see we have James Hobson and Jake Cranham. Welcome to the Finance Committee meeting, Town of Canmore.
Thank you for having us. And for those of you who don't know us, my name's James Hobson. I'm joined with my colleagues Chart Jahal and Jake Cranham. We're investment advisors and portfolio managers at CIBC Wood Gundy. We've worked with the town for many, many years now on the investment piece. This morning, we're here to provide you with an economic update. So the goal here is just kind of to take a quick look on sort of where the economy stands as we head into the end of 2025 into 2026. We're going to look at what's really driving the current market slowdown, how policy choices in the U.S. are shaping things here at home, and what it all means for communities and local budgets. We're not going to focus on short-term headlines, as you all know, they change very, very rapidly these days with tariff policy and whatnot. But we can still try and help you understand the underlying direction, which seems to be slower growth, tight labor markets, and shifting interest rate policy. We all saw that rate cut by the Bank of Canada last week, and it remains to be seen sort of where that ends up, but we'll get into that in a minute here. The big picture, though, is that governments are still spending heavily. Growth is slowing down. Inflation has come down, but it hasn't disappeared. And we've seen interest rates, as many of you are aware, on a much lower path, which could open up some breathing room into 2026. So I'll jump onto the first slide here. We'll just start by looking at sort of the impact of what the U.S. is doing on Canada. So the U.S. Fundamentally has a revenue problem. They're not collecting enough revenue to keep up with what they're spending. They're spending significant amounts running up government deficits that would be typical during recessions, even though they already have strong GDP and low unemployment. So essentially, it's tax on consumers, and the rationale for it is to bring back manufacturing jobs to the U.S. And raise government revenues to try and reduce these massive deficits. So the problem here is, though, if we look at this slide, that shows you the impact of a 15% tariff on government revenues. It's sort of a drop in the bucket. So it's a lot of political posturing, but it's tariffs do not seem to be the answer. Policymakers in Washington, they're proposing these tax on imports to fix the trade gap and to bring back manufacturing jobs. All it's doing, though, is making goods more expensive for consumers and local businesses that rely on imported parts and materials. So if I jump on the next slide here, if we go to that, one of the goals, the first goal I mentioned, which was to bring back manufacturing jobs, the challenge here is that millions more workers are needed to fulfill that goal. So if you wanted to truly boost production and bring back manufacturing, the US would need millions of additional workers, and they're just not there. So the challenge here is that the labor force participation rate, so the number of people in the worker pool, hasn't really recovered since the pandemic. And on top of that, we have a lot of retirements accelerating from the baby boomer as they exit the workforce. So that's certainly not helping. And to make matters worse, on the next slide, the immigration policy it just doesn't match the goals. So on the left there, you see the arrests made by ICE, a huge spike up versus previous years. And then on the right there, it shows you what percentage of US undocumented workers make up those different industries, with manufacturing highlighted there in red being one of the being one of the largest components there. So if you're trying to bring back manufacturing, but you're also kicking out all the workers, it's just not, those goals don't really line up. So if we jump on the next slide, what the result of this is basically what we'd call an end to the US outperformance. So this slide here just shows you real GDP growth in 2024, that's the red bar, and then real GDP growth change from 25 to 26, which is the gray bar. So contrasting with Canada, which we're looking for sort of a mild slowdown, the US real GDP growth has taken a real big hit because of this. So, in the past few years, the US economy has basically outpaced most developed countries, largely thanks to a lot of government spending and a resilient job market. But essentially, they're shifting now from a period of sort of exceptional performance to one of sort of a more normal performance. And we're already seeing that show up in forecasts. Just this morning, they came out in Bloomberg saying that the odds of a rate cut by the US Fed are much higher now as we move into December, as they try to get this growth kind of stimulated. So what does this mean for Canada? The problem here is that a protracted trade war, so a tariff dispute with Canada specifically, it wouldn't be just a one-year problem, it'd be a multi-year problem. Just given that Canada is so deeply linked to the US on trade. So when they put up tariffs as barriers, the impact is pretty immediate, especially on sectors like autos, manufacturing, steel, aluminum. So if the tariff war escalates, it's going to take a pretty big hit to our GDP. Just a good reminder of why we need to diversify our trade. So when the tariff war kind of came out originally, all the smartest economists in the world put their heads together and they all came out with the same result, was that this is going to be bad. So CIBC Economics run some simulations showing what's the impact on Canadian GDP under various tariff scenarios. Now, the silver lining here, if we're going to be eternal optimists, is that we're probably moving towards that least bad outcome. So it's not great, but it's stable. We're going to get into the kind of the impact on the components in the Canadian economy, like inflation and interest rates, shortly. But in terms of tariff policy, it seems so far that cooler heads are prevailing. They're walking back from a full-blown trade war, and Canada's fundamentals still stay relatively solid. So for councils and communities, what does that mean? It means sort of cautious optimism, slower growth, but a soft landing. And hopefully these recent interest rate cuts start to help stimulate the economy as we move through into 2026. So that's kind of the trade war scenario. I'm just going to turn it over to Jake for the next little piece here.
Yeah, so we'll sort of take a look at how the tariffs actually have been impacting CPI, which is, of course, one of the major factors the Bank of Canada is going to look at when they're looking at their actual interest rate policy. So this graph here was put out by CIBC Economics a little earlier in the year, and it sort of just gives us a general sense of how we would expect tariffs to impact CPI overall. And so what we can sort of see, as we would expect, is that when the tariffs are put on, supply chains are disrupted, and in the short term, CPI rises. Ultimately, what starts to happen is that the economy slows down and the price levels just can't be supported. And so, of course, we start to see a bit of a lag in CPI. Now, one thing to note here is that nowhere here is CPI going negative. So once the prices rise, they're not expected to come down. We're just expecting CPI to start to go a little bit slower. So we can go to the next slide. We can take a look at a more modern picture of what's kind of happening here. But so kind of as expected on the right there, you see that sharp spike where tariffs come on. And depending on sort of the next moves, we might see CPI actually start to come down. Now, that dotted gray line shows the Bank of Canada current scenario, which could give a bit of insight as to why we got some commentary that we might be holding at the 225 overnight rate for now. However, if we get the sort of de-escalation scenario or the CIBC expectation that CPI continues to drop, we might actually see that overnight rate continue to come down. On the left there, we can sort of just see, in general, other items excluding food for January to March versus April to July. We've seen CPI has dropped on average month over month. You'll notice food is cut out there. This is pretty common with any core CPI measure just because food is so volatile. But in general, we do kind of see the original CIBC expectation coming true here with that sort of tail effect of CPI coming off. And with all three scenarios, we're sort of expecting to stabilize just under that 2% range, sort of around Q1 2027. And then kind of going back to the diversification that's needed. So this just shows the US's major trading partners and which ones are most dependent on the US as a percentage of their total exports. So unsurprisingly, north and south of the US, we've got Canada, Mexico. Both have almost 80% of all their exports going to the United States. And so, of course, this is an obvious area where we need to diversify. The one that's actually interesting here is China on the right is at 16%, and you can sort of see where the different strategies have come in dealing with the US. China, obviously, we got a lot more volatility back and forth. We saw some 100% tariff, 200%, 300%. So they have a lot more leeway to actually negotiate and play hardball. Whereas Canada, Mexico have had to be a little bit more submissive and just try to be lenient with the US and just sort of avoid any kind of conflict to the greatest degree possible. Now, efforts have been made by the country to actually diversify this, specifically kind of starting in 2018, actually. And we had some projects sort of come to fruition. We saw some liquefied natural gas shipments begin in 2025. So we are seeing these efforts, but they need to continue, and we definitely need to diversify this exports. And then the last one we'll kind of take a look at here, just regarding the overall Canada tariff situation, is CUSMA compliance. So the initial outlook was a little bit more bleak than we've seen recently. With the increase in tariffs, we saw a lot more companies actually looking to ensure that they're compliant with CUSMA. And so the initial outlook on how much we would be paying sort of changed a lot. And now we're actually seeing that compared to the rest of the world, Canada is doing quite well in several sectors, excluding steel and aluminum, which you can see on the left. We're still outpacing the rest of the world by a little bit, but vehicles and parts were kind of around that 12% versus 20%. And then other goods significantly lower with just above zero, kind of 2% range versus that sort of 8% level. And I'll pass it over to Charit to continue.
Thanks, Jake. All right, so we are eternal optimists. James kind of alluded to that, so I'm going to try and put a little bit of a positive spin on a trade war for you guys as much as I possibly can. The first one being Alberta is not as exposed to US tariffs as our peers. So largely within our province, Alberta's export base is obviously dominated by the energy commodities, which essentially allow it to face less direct tariff sensitivity than the rest of Canada. Obviously, when you have tariffs, it's an input to the economy. However, because of our export base, we are a little bit more insulated. So what that means, our province faces less downside risk from potential trade disputes and escalations than other manufacturing heavy regions like Quebec and Ontario. There is relative insulation that supports our resilience as long as our commodities continue to fill US demand. That is the key. Yes, we are less sensitive because of our energy commodities, but we're less sensitive because that demand has been taken by the US. So as long as that demand continues to being filled, we're going to be okay. But that just goes back to the point that Jake just said, that we need to diversify. And diversification from an energy industry, we've heard it in this province material amounts of times. Diversified trade, we need to lean in this province into energy-linked advantages that are supportive of our infrastructure, whether that's more pipelines, rail access, whatever that means, or even domestic production activity where we just process our raw materials here before taking them out. That gives us a significantly more market optionality. But yeah, Alberta is significantly less exposed to the U.S. tariffs than our peers. But going forward, we can't just sit on that. We need to use that and diversify away as much as we possibly can, just to insulate ourselves from volatility going forward. Now, looking ahead, the big question for our team and a lot of people out there is what's happening next? So what's going to happen with interest rates and where are we going to kind of go from here? Well, the first thing we can look at is, well, what's the Bank of Canada saying? What are they saying themselves? So the Bank of Canada's own projections suggest they need to cut rates, and we did see the rate cut back in October 29th, I believe, down to 2.25. So what this graph essentially shows you, the red line is the historical, then you have the vertical line, then the projection going forward. This is the Canadian economy's output gap reflected as a percentage of its potential GDP. The output gap is just a difference between what you're actually outputting in terms of GDP and your total potential. So it basically shows you the slack. So what you're seeing between both CIBC and the Bank of Canada's own forecast is we're sub-trend. We have sub-trend growth going forward. So what this shows us from an interest rate standpoint is to re-anchor activity, policy rates need to be below or need to be at a low enough level to start stimulating, make us want to borrow debt more. And what that means, we need to be below the neutral rate, which I'll get into the next slide here. So we need to re-anchor activity to get policy rates low. And then how low do we go, and then how long do we go low for? So this slide helps us answer the how long do we have low interest rates for. We need to make sure that that output gap kind of comes back and essentially dissipates. So when do we see the low interest rates staying until at least well into 2026? We think at CIBC that we're not only are we done cutting rates, but we're going to stay at low interest rates from here to 2026. So this shows us that we need to cut and for how long. But then the next question that we need to answer is where do we cut to? And that's where the neutral rate comes into the play. The neutral rate, for all you who don't know, you may already know, and I apologize if this is just a repetition, it's defined as the level that is neither stimulatory nor restrictive for the economy. So which rate are we as individuals or businesses essentially agnostic about borrowing or not borrowing? It kind of floats, it fluctuates. Right now it's estimated around 2.75. It sits around 2.75 to 3. But historically, what's the most important, this kind of shows you where the Bank of Canada has actually set its interest rates, which is always in a stimulatory environment below. Then obviously in COVID, we shocked above. But historically, rates rarely remain at the neutral rate for long. Economic cycles and shocks usually push the policy rates above to fight inflation, like we did in 2023, or below to support growth. However, given in the current conditions of slowing growth, stable inflation, and weak business investment and GDP growth and all that, the bank will likely stay below the neutral rate for a long period just to encourage spending and offset those trade-related headwinds. Now, that tells us, yeah, we need to be below 275. I will show you guys a forecast at the end that shows you where we think we're going to bottom out. I personally, and I say this in all the presentations, whether we end up at 2.25, 250, whatever it might be, as long as it's below 2.75, that's the most important piece for Canada. Now, another sign that we look to see that what's going on with interest rates and how long we need to see interest rates stay low for is what's going on with businesses. Activity in interest rate sectors, sensitive sectors are still really low. Rate finance capital expenditure programs have been pretty subdued. If you're a business and a lot of your capital expenditure might take on borrowing debt to invest in growth, you probably don't want to do it for one, rates are still too high, and two, if you don't know what return you're going to get, if there's a lot of uncertainty in the market, no one's willing to put that capital to work yet. So even with inflation easing, the real borrowing costs where they're at right now are not at level supportive of growth. So what this tells us is growth, again, needs to stay, growth will stay below its potential until you get some economic stability or clarity or financing conditions ease. So this is from a business standpoint that supports the low interest rate environment. From the individual standpoint, which if everybody has the unfortunate luck of having a mortgage renew this year like I do, it's not a good year to have your mortgage renew. Right now, we've had a lot with the interest rate cutting cycle that we've gone through. The variable rate stress is easing as rates fall. So a lot of variable rate payments that you guys can see here have their monthly mortgage payments have come down. But the market still hasn't shaken out the low interest rates from the pandemic years. Fixed rate mortgages are still facing a large payment jump. I think it's between 20 to 30% is the projected payment jump in fixed rate mortgages. So again, in a couple months here, I will be very depressed as I take my mortgage up for renewal. However, what that means again for the Bank of Canada, they're smarter than myself. They're smarter than a lot of the team here. They know this, they see this data, they're paying attention to this data. So that policy rates again need to stay low to smooth over that rollover wave as mortgages kind of renew well into 2026. So it's basically, we have every data point that we can look at from interest rates pointing to we need low rates and we need low rates well into 2026. So that just kind of gives you a sign of where we're going, what direction we're going, and how long we're going for. Now, again, eternal optimist. Yes, GDP is going to slow, inflation has stabilized, and there's a lot of uncertainty from tariffs. However, here's my internal optimist looking at this data here. Alberta is going to lead output in Canada in terms of our GDP in 2025. Right now, the Canadian real GDP forecast is around 1.2%. Alberta is going to be around 1.9%, and that trend is likely going to persist into 2026 because of a multi-pronged approach. One, our housing market's doing well. Two, are less sensitive to the tariff rate environment that we just discussed earlier. So yeah, as a whole, from a growth perspective, we're going to outpace the rest of all of our peers out there. However, from an unemployment perspective, it's kind of right in line with the average. You guys can see it on the slide here. In 2025, the unemployment average in Canada around 7%. We're just right above there, 7.1. So Alberta unemployment rate is going to sit right in line with the national average. So overall, that's kind of where we see Alberta beating our peers. And why? Because we're not as sensitive to the manufacturing sectors that the president down south is targeting. Now, when we put this forecast together, we had it was as at October 1st, 2.5% is what the Bank of Canada rate was. We thought they were going to cut again last week, and lo and behold, it came to fruition. So right now, as of right now, the Bank of Canada overnight rate sits at 2.25. Again, it's below that neutral rate. That is the most important piece. And if you look at the forecast, it's going to stay there well into 2026. This is CIBC's forecast. We've seen forecasts from TD, BMO pushing it all the way down to 2. We've seen some at 2.5. Again, we're agnostic. As long as we stay in a growth environment, we're okay. What I will say we were touching mainly on economics today, but from a investment portfolio, the town of Canmore's investment portfolio, I will say administration is phenomenal in terms of the constant communication we have with you guys. So we're able to position the portfolio ahead of a lot of this rate cutting environment to take advantage of the high yields. So we're able to do that. So just my kudos to the administration team in working with you guys as well. And then if you look at the US, James kind of pointed it out, there's signs to them cutting rates. They're just delayed cutting rates relative to us. So they have to start cutting rates as well as tariffs are going to start having an impact on their side as well from an inflation standpoint before the downturn that Jake just kind of explained. We touched on it a little bit, but I also want to make sure I have time for you questions for you guys. Jake touched on CUSMA. One thing we didn't touch in the presentation is CUSMA actually, I still say NAFTA, CUSMA, USMCA, NAFTA, whatever you want to call it, actually expires next year. So that's one to watch. So the most important part about that one is all three parties have to unanimously agree. So Canada could lose its exemption at any time. So yes, we're all doing really good because a lot of people are filing for exemptions and our effective tariff rate is really low. But that can go away at any point in time. And in the world of the US where he makes an agreement and the negs on agreement tomorrow, who knows what that can look at. So that's what the market's looking at into 2026. There is a cloud of uncertainty that's going to hang over capital spending plans across a broad range of Canadian export sectors. So as we start to get this interest rate cutting environment come to fruition, and it's going to take a while for it to kind of trickle its way throughout throughout the entire economy there, then we will start to see that kind of rebound, but that's still at the current rates is kind of not very stimulative. This sentence is a weird one for me to say because when I was in school, they used to tell me that the risk-free rate was the US Treasuries. And now I'm about to say that the US government's word is a shaky foundation, which is an odd sentence to say, but it very much is. He's reneging on agreements. He changes his mind all the time. This is going to impact business and consumer confidence along with capital spending. Again, it goes back to if you don't know what rate of return you're going to get, you're not going to put those dollars to work. So the US government's word is a shaky foundation, and that's probably not going to go anywhere anytime soon. So significant more volatility in the market from that standpoint. And then looking ahead, forecast remains for lower rates into 2026 as the Bank of Canada needs to be below the neutral rate to stimulate growth and offset the negative impact of tariffs. Now, with that, a significant amount of information in a short period of time, but I want to make sure I leave time for questions for you guys as well.
Great. Thank you to all three of you for a very enlightening presentation, excellent information. And I'm looking to see if any of my colleagues have questions. Councillor Graham.
Thank you, Your Worship. I wonder if any of you have forecasts for the tourism sector in Canada or Alberta over the next 2 to 5 years. Steel's an interesting one, but doesn't pertain to us very much directly here. I wonder if you can talk about tourism and the tourism economy, and maybe a little bit about the housing and housing economy too.
Yeah, perfect. So what I'll start with is the housing and the housing economy. So what I will say about Alberta, again, eternal optimist, our housing market relative to all of our peers is really well balanced. We have a really good supply-demand balance within Alberta, specifically for our housing. And the reason for that is kind of multi-pronged. One, our housing has always been more affordable than all of our peers in terms of the other provinces. Net migration from other provinces has helped stabilize that as well. So from a housing perspective, the forecast is actually pretty bullish and positive for Alberta looking ahead. The tourism one, I'm sensitive to kind of talk about it. I don't have the data off the top of my head, so if you're okay with that, I'll take it offline, make sure I get the proper data, and then get that data over to administration that they can forward to you guys.
Thank you.
Okay, looking to see if there are any other questions. I don't see any. There was, like I say, a lot of great information in there, and I'm very glad that you shared some time with us today. So thank you very much for being here.
Thank you very much. We appreciate your time.
Thanks so much.
All right, so we'll now move forward with the D4 2025 financial report, and then after that, we'll take a break, okay? Oh, unless a break is really needed right now. Okay, a break is needed right now, so we're going to take 10 minutes right now. soon as we are back streaming, we'll get going again.
Perfect. So that concludes what I've been calling the guest star portion of this morning meeting. And from here on out, it will just be presentations from us as administration. This isn't necessarily an agenda item, but before we start with any of the specific content, again, as this is kind of the first meeting of this cycle and with the new council, I did want to run through a little bit about just our 2-year budget cycle and specifically an overview of our budget amendment process. So as by now, I believe all of you are aware, the town follows a 2-year budget cycle, and 2025 was the first year of that 2 years. So back with the last budget process, 2 years of operating and capital budgets were approved for both 2025 and 2026. As the budget for 2026 is already approved, this current process is just about the opportunity for amendments and really fine-tuning the budget that was approved at that time. Departments had the opportunity to review their approved budgets to assess the need for amendments while maintaining their existing programs and services. This process formally kicked off in August, with departments bringing any recommended amendments to the finance team, which we then compile and brought to the corporate strategic team for review. Operating amendments for 2026 were considered based on extraordinary, unexpected, or emergent new information. Similarly, capital projects, as much as we're not talking about them much today, but those were also reviewed based on new information, including potential tariffs, as was just discussed in the previous presentation, supply chain disruptions, new regulations, and the costing of any key materials. With respect to the specific meetings, administration will present information to the Finance Committee on various recommended budget amendments, as well as options for the Finance Committee to consider. We do want to encourage questions throughout this process, so if at any time you have a question, please feel free to just jump in and we can tackle those during the presentations. And then we'll also have dedicated time at the end of each of the sessions as we go through to kind of check in and address any overarching themes that might have come up for you as well. Again, this is, as much as we have presentations prepared, I'm happy for this to be a little bit more free flow as things come up for each of you. The first 2 meetings, we have more specific agendas and presentations, but again, happy to address things live. And then the next 2 days after that, the 20th and the 25th, are specifically dedicated to discussion and deliberation. So if there are any topics we need to get more information on and come back at a future meeting, we can park those issues for those days, or any bigger discussions, just to make sure we do get through the content we have earmarked for these first 2 meetings. Those will also be when any motions would probably best fit to be deliberated. And one last item here, there is, I would say, a certain art to crafting motions, and after 6 years, there is still a lot of nuance there that I am discovering. So if you do have proposed motions you're considering, if you do have the opportunity to provide them to administration in advance, specifically the clerk's office are experts in this, that really helps ensure those motions are captured as best as possible by the time we get to deliberating them.
If I could just add a component to that, I think something that worked well last time was if council provided motions to me first, in case there's duplications, so we're not having finance having to add, respond to multiple people on the same thing. I'm happy to make sure that those who put forward motions are the ones that move the motions, of course, but it just helps with an understanding of, I can put them together and then send them on for finance. All right. Since the first deliberations are the 20th, if there are any operational amendments, please send those to me if you can next week so that we can start that process. Obviously, capital is pretty close before that, so that way we can save the very last minute things if there's any capital. But I suspect most changes, I'm guessing, might be around amendments, although I'm not expecting a ton, but let's try to aim for that. I'll send out an email with more particulars. All right?
Thanks. So yeah, building on what we were just discussing, so this is what we're looking at after today. So on the 18th, we'll be covering the capital budget discussion and some related topics. And then there are those 2 discussion and deliberation meetings on the 20th and 25th. depending on where we get to, if the meeting on the 25th is needed, it might be if there's further good discussion on the 20th. And we're presently targeting budget approval at council on December 9th to have that final approval again before the holidays and the end of the fiscal year. So with that, next, trying to remember what we have. That was all those things. So next up, I am very excited to introduce a new face at the table. We're kind of partway through, but I couldn't be more excited to have a new member of our finance committee, or finance team, presenting to you as finance committee. Some of you may recall one of the new positions we got approval for in the 2025 budget was a financial reporting supervisor, a major new addition to the work Mr. Irwin and I are doing. So this is Mr. Foppel, Jeff, who joined our team this year. Comes to us with incredible background. We're so lucky to have him in public accounting on the audit side, and specifically working with municipal clients as well, which has been very relevant to our team. I've historically been the only CPA on staff. We have now doubled them, so just a huge support again for the team we have, and a major contributor to everything you will be seeing today. So just wanted to take the opportunity to introduce him, as he'll be a key part of all these meetings going forward. So with that, I'll hand it over to give an update on the trends we're seeing for 2025, our current year variances, and then we'll move on to talking about 2026 after that.
Welcome.
Thank you very much.
Mr. Foppel.
So we have 3 Jeffs in the room now.
I do have to clarify sometimes. It's like Jeff said, I'm like, which one? We should have coordinated so they all sat together too.
Next time, yeah, for sure. So what I'm going to do is I just want to walk everybody through the year-to-date report. So Rick's done a lot of work on the report. You have the full report with the briefing notes, but kind of what I want to do is walk through that report at a pretty high level, okay?
Can you move the mic? Beautiful, thank you, sir.
Sorry. Okay, everybody can hear me okay, though? Yeah, okay, so we're gonna look at the year-to-date at a pretty high level. Yeah, so I'm just going to put that slide up. So a little background here. Administration monitors the financial results against budget amounts on a monthly basis. Okay, so this report that you have, this is the Finance Committee report that Finance gives to you on different intervals during the year. So this is one of those intervals. This report, this is the high-level, rolled-up version of all of the departments of the town. And so I'm just looking at this at a high level. There's a few things, so I guess I want to note on this report is this is a periodic report, so we don't have regular accrual accounting reflected here. So there's some timing issues with some of our vendors and so on that are going to contribute to some of the variances that we're seeing here. Completely normal. This gets sorted out with year end. The other thing is we don't record all of our reserve transfers until the end of the year as well. So that's not reflected here as well. So you'll see the little items highlighted in blue there. Those are the big variances that I wanted to kind of talk about at a very high level. You'll see sales and rentals, permits and fines, and transfer and other on the revenue side. On the expenditure side, excuse me, the salary, wages, contracted services, and borrowing costs. So those are the areas we're going to look at on the next slide. So if this slide just summarizes those revenue variances that we saw on the main report. And so some of the bigger areas that we saw some big variances, sales and rentals, looking down in the details, that relates, part of the variance there relates to paid parking revenues. So at the end of August, paid parking revenues are higher than budget assumptions by about $364,000. Now, wanting to note there that within paid parking, if there's any surplus within paid parking, that gets transferred at the end of the year to our paid parking reserve. So that $364,000 doesn't contribute to our bottom line. Okay, so just point that out. Continuing on, permits and fines. Protective services, I've noted, it's actually, the fines collected there are down by $66,000. This has to do with vacancies amongst community peace officers and municipal enforcement officers, leaves and vacancies amongst those people. So don't have all the people, we're not collecting as much fines. Planning and development under permit and fines, we're up by $489,000 there. And now that is directly related to an increase in permit volumes on several large developments, but we know that. That's probably pretty self-explanatory. But again, so kind of like the paid parking revenues, with planning and development, the permits, 90%, I want to get this right. So on our permit revenue, anything that's over our budget, 90% of that goes to reserve. Okay, so we're seeing an increase there, $489,000 over our budget, but 90% of that is going to go to a reserve at the end of the year. And I think that's planning so that, we're going to have years where we're not going to have as much planning revenue, so we're allowing for those years.
Yeah, I can provide some, additional information on that for the Finance Committee. So really, the reserve was created, I think, about 4 years ago, and there were a few reasons behind it. One is there is the nature of applications can be kind of cyclical. So one year we can have a lot, the next year we can have maybe not so much. So we are aware that the amount that we budget for, there's always going to be some variability up or down. So we created the reserve to kind of buffer against that variability. Another reason is a lot of the applications we have, particularly related to something like subdivision, there are multi-year resource demands of staff to do inspections related to infrastructure installation and that type of thing. So the permit application fee is a in-year one-time fee, but the work associated with that application can continue over 2 or 3 years. So we wanted to be able to buffer that. Mm-hmm. The other thing is we do use some funding from the reserve to pay for policies or processes related to handling applications. So for example, the land use bylaw update, I believe, is fully funded through the development application reserve. So it's really all focused towards improvements in the planning process and the development process and ensuring that we have right-sized resources.
Good. Thank you. Go ahead.
And Jeff and Whitney, thanks so much for the heads up on how that breaks down. So if the 90% going towards what Whitney was speaking towards, where does the other 10% go?
It stays there.
Oh, it just stays with it.
Yeah,
Okay, thank you.
It recognizes that there is that kind of corporate overhead amount for IT and HR and facility, like, so there's a bigger amount. Facilities is another one.
Yeah.
Finance, obviously. So we want to make sure that we're kind of keeping that mill rate supported function whole at the same time as acknowledging that these revenues come from applicants, and we want to make sure if there is a surplus, it is directed towards the applications.
Yeah, awesome, thank you.
Okay, and moving on from there, if you're looking at the grants, our grant revenue was higher than budgeted. There was 2 reasons there. So when we budgeted for the local government fiscal framework grant, the operating side, we budgeted about $200,000. And it came in at 401. So we got more than what we budgeted for there, which is a good thing. I checked here the other day, I think for head of Chelsea's presentation last week, and we still don't have, the government still hasn't put out the 2026 numbers for the operating for the LGFF. So that's kind of an unknown right now, okay? So probably there'll be a variance next year, unknown what we're gonna receive there. So, I mean, budget conservatively on that because we're not sure. The other grant revenue that we received was under the short-term rental enforcement fund. So we received $307,000. Of course, these funds are only applied against expenses to do with that program. Okay, so at the end of the year, we'll do an analysis and, you know, look at how much we spent, how much we've collected. Anything that's unspent will carry forward to a future year. So why I'm saying that is that $307,000 doesn't contribute to our year-end surplus, okay? It'll go away basically, depending on how much we spend on that program. And then under other revenue, we received a kind of a one-time $72,000 refund from Fortis to do with some previously installed streetlights. So just some bonus money that we didn't know about and not budgeted for. So on my next slide, want to talk about the expenses. So you look in most of the expense categories. We're trending ahead. We haven't spent as much as we've budgeted for. And of course, the biggest variance was within salary, wages, and benefits. So you'll see that there was a $1.6 million variance compared to actual. Now, of course, this primary reason that we're seeing this big variance is vacancies in different positions, as well as timing of new hires. So take my position, for example. We budgeted that we were going to have me for a full year. I didn't start till July. Okay, so there's a savings basically compared to what we budgeted for. So, I mean, not just me, but there's other ones amongst the department. So vacancies, timing of new people, yeah. You look like you have something.
Yeah.
Oh.
We normally expect there'll be slippage.
Yes.
And we often account for that, some sort of an estimate.
Yeah.
Is this 1.6 million more than estimated? Or
It is to date, okay? So the budget is 860 for slippage. And I guess, I don't know how it's trending to date. There's still some more adjustments to do, right, Rick? So I mean, I don't think we'll see that full 1.6 by the end of the year, but yeah.
The 860 goes away.
Yeah, the 860 will go away, yeah.
Right, and this number is after the 860 is taken away, yeah. And so something that I think Jeff has mentioned a few times on a number of issues, and I think it's just really important to underline, nobody starts spending $5 million worth of net gain here because a lot of that's going to go away due to timing of things, due to
That's right.
transfers, things that will materialize in the months that are not included in here, or that they're already designated by the, you know, whether it's the paid parking or the development, you know, those sorts of things. So this is a great update, and certainly we'd rather receive an update like this than showing that we're under revenue and over expense, but nobody bank anything yet.
But yeah, and thank you, and I think that's a good lead in to a presentation. A presentation I'm doing this afternoon or later today, kind of giving us my next presentation will be on where our debt is, where our reserves are, where we're expecting it to go, and I think, okay, we're seeing that there's some good numbers here, but there's some other things we need to talk about there, so, yeah. So we saw some savings in contracted services as well. Within protective services, our RCMP contract, there's fewer members at the RCMP than expected, so our contract paid to them is lower. And I think, Rick, we received a report the other day, and it looks like it's going to be the case as we go through the rest of the year as well. So we're going to have some realized savings there without a doubt. Within public works under contracted services, we had savings in snow and ice control because of the conditions during the spring, so that's a good thing. I'm assuming, looking outside, we're going to have continued savings as we go forward, but who knows? And also there was some timing of some contracted maintenance and repairs within public works. Well, the skiers want it, right? They're wanting the snow.
Very wet summer, so if that starts to translate to snow, I mean, this is one of the items that every year is so much variability.
Exactly. It can be gone within a month of snow, even if you've been really good throughout the
Oh,
year.
that's right, yeah.
Been there, done that, seen it disappear.
Can I just build on that too? I think it's important because in any given year, we could be a couple 100,000 under, but because it's an unknown, we could also be a couple 100,000 over. So it is pretty variable. We've
Yep.
tried to budget for that mid-range, but extremes in other direction, we need to just be prepared to accept when they happen.
Then the last item under the contracted services, so making up that big variance we saw on the main page of the report, EPCOR. There's a timing difference between when they submit their invoices to us, when they get reported. So we kind of feel that a lot of that variance will probably disappear by the end of the year when we do our accruals and everything. So yeah, building on what Sean said, yeah, don't count on that one either. And I guess the other thing I'd like to say on that, talking about the water utility, if there is a surplus in the water utility or when there's a surplus, it doesn't go to the general bottom line. Any surplus in that function goes to the reserve for water, wastewater. And the last item is borrowing costs. So our cost of servicing debt is lower than budget by about $354,000. And that basically has to do with the timing issue with our draws on the construction of the wastewater treatment, water treatment plant, so up at the Nordic Center there. So that has to do with the timing of when we took the debt. So for this fiscal year, we have less debt servicing costs associated with that. Yeah, so I think that's it on the expenses. But again, this is at a really high level. This doesn't include our accruals that'll happen at year end, doesn't include reserve transfers and so on. So just a really quick high level summary of that. I don't know if anybody has any questions or anything they want to bring up, talk about it further.
I'm not seeing any. Thank you.
Okay, thank you very much.
So now we move on to the impacts on local government from provincial changes. Item D5.
Is it F8? F8?
Yeah, they just share.
I hit F8.
Done.
Sir? I'm good, yeah. Thank you, though. Appreciate it. Okay, myself and Mr. Mackay are going to present on the impacts on local government from provincial changes. It's often referred to as provincial downloading, which is really a general term used to describe ways provincial governments shift costs, responsibilities, and administrative duties to local governments without providing adequate funding. We did kind of reframe it a little bit, just to kind of have more of an encompassing, I guess, way of labeling it, because there are, lots of different ways that things can kind of come to us downstream and really have a huge impact and a huge financial cost as well. So there's lots of different ways. Some of those ways could be through new legislative requirements, but also things like reductions in infrastructure grants. So we'll talk a little bit more about the specifics. In terms of relevant council motions, there were two back in 2022 that council directed administration to track and report back really on, at budget time, the total cost for delivering emergency medical services by Canmore Fire Rescue based on a cost recovery model. And then there was another motion as well, really to identify potential areas of that downloading and cost and report back at budget time. And that's really what we're here to do today. So again, probably the biggest takeaways for 2026, we're forecasting $10.7 million is the impact. Those are various items that come from things like funding eliminations, program changes, lack of funding support, reduction in funding, provincial downloading of responsibilities, as well as regulation changes. What our general approach is to track and categorize those. So in the table that Scott passed out, the funding formula, to categorize those by funding formula and or program changes, provincial requirements, the lack of provincial resources, as well as tourism infrastructure impacts. So that's kind of how we framed this presentation today. So we'll go through those 4 key topics. And then to identify the program and then the impact on the town of Canmore, as well as to track the year of the change, and then to estimate those impacts when they're not historic, so prospective. So we'll start out with funding formula and or program changes, and I'll pass it over to Scott.
And so just as we run through these, I mean, I'm not going to read the table to you, but the intent is to provide a little bit of extra context to the various downloads. And if you have questions, by all means, please jump in. So on the traffic fine revenue category, these changes were made a while ago and continue to impact the municipality as far as what's retained. So both the percentage of provincial retention changed, and then a variety of changes to the photo radar automated traffic enforcement. On the RCMP, the cost for biology casework, that continues to be an item that we're paying for that we weren't previously. New download this year essentially is body-worn camera costs, which are an increase but are partially offset by a grant we've received to support us in paying for that. Retro pay continues to be something that's an exposure for us that we don't have necessarily control or influence over. So it's, yeah, there's some risk there. As well as the potential move to a provincial police force. There's no cost there yet identified. The reason it's on the sheet is really to identify that it's a potential risk and cost down the road. So something to monitor.
Scott?
Yeah.
With the increased cost, can you go back one slide for me, please?
Yeah, you bet.
So the RCMP retro pay. So 4 years ago, we ended up paying, I forget, a couple $1 million if I recall, or 1 point something. And there's potential to do this again. And before we took it out of reserves, if I recall.
I can't speak to the exact detail there, but tax stabilization is often used to smooth in. So are we prepping for this by putting more into reserves for this potential, or are we just waiting to see what happens and then taking out of something like tax stabilization? I'll probably defer that question to finance. I'm seeing Rick, Mr. Irwin nod, and
I'm sorry, yes, I keep forgetting that we're actually.
Yeah, Rick, feel free to jump in here. I mean, we're not specifically putting any money aside for this. I mean, if anything, we've been seeing that our local FTEs have been trending lower than we've been budgeting for, so we've been having savings under the contract. I think if I could, I think what Scott's really alluding to here is we have zero control over what that increase actually ends up being. Even this, like when that timing was going to start to be applied to our contract was kind of a moving target. So I don't think there's any dedicated intentional savings right now going to our reserves to pay for some future retro pay, but it is a significant cost impact that we don't have any control over the amount, and even the timing we didn't have a lot of insight into. So again, in terms of risk, it's just one we're monitoring, and Rick, feel free to add anything there.
Yes, we actually do an estimate every year. We accrue for it. So we accrue, 2% or whatever estimate may be. So we put that money away. What you're probably thinking of is when we switched from 70% to the full price, and that kind of hit us. And that was a big jump, and we actually funded part of that from tax stabilization over a few years.
Right.
We graduated that in. But the retro pay, if they got a settlement, whatever, we do account for as best we can for it.
So
every year. That would be in this year's numbers.
Okay, so we are taking a more prudent approach and putting a little bit of money away for those future things. Okay.
Yep.
Yeah, thanks, Rick. Sorry, I was thinking of the 70 to 90 jump too. That was the really
Me too.
significant
And
impact.
That was the big one.
I believe we accrued for that. We knew it was coming, and we
Well,
also,
we pulled from.
we pulled, right? So we intentionally set aside knowing it was
We
coming.
smoothed it out.
Right. What's more challenging here is that this is a union contract that we don't negotiate.
Right.
So we just know when the dates of the contract are up, but we're not involved in the negotiation, and the timing of how long those will take are unknown, and we have no say in what the ultimate contract is. So it's the 70-90 we had a sense was coming and could plan for it. This will be a bit unplanned.
And then I guess along those lines, I know there was advocacy for the municipalities through FCM to be more involved in that process. Did anything ever come of that? Nobody? Yeah, okay, thanks. Sorry.
Sorry, I've got a question as well. More just for my knowledge of how things work. Because the RCMP is a federal agency, so if the first three items under RCMP, is that provincial direction, or is that from the federal side of things?
So the casework, cameras and retropay?
Yeah.
I believe the cameras would have been probably an RCMP-wide decision, so across Canada. But I'd need to confirm that that's not Alberta-specific. Retropay is, again, we don't have necessarily control or influence there. The province may have a little bit more as they enter into an agreement with the federal government to provide policing services in the province.
But, well, RCMP is federal. It is an agreement through the province. And so what portion is paid for by the province or not paid is determined by the province.
That's right.
So the 90-10 after population, the 10's paid by the province. Biology casework, that's stuff that was previously paid for by the province and now it's not. Cameras, the decision to pass that along to each detachment and therefore the municipality, that's decided by the province.
Awesome, thank you, I appreciate that.
Thanks for that context. Okay, I'm going to keep moving unless. Under the community supports and services category, so working our way down the sheet there, there's two items identified which are really, again, risk pieces or where there's uncertainty. So some changes to the disaster recovery program and decreased support. Not a download unless we have a disaster that requires access to that program. And then victim services, some model changes there have resulted in less cost to the municipality, but it's unclear what the long-term impacts of that change will be as far as potentially demands on other services offered by the municipality or knock-on effects. When it comes to funding model changes, there continues to be no indexing for the FCSS grant that the municipality receives. And so while there's a requirement for the municipality to contribute 20% and the provincial grant would be 80%, we continue to go beyond that in a large part to keep staff on the wage grid with the rest of municipal staff. This funding model change with Parent Link and the Family Resource Network grant resulted in lower funding to the municipality, and we have a municipal contribution to maintain those programs at $179K. There's a few other community supports and services that we've gotten into the, I guess, business of. One is some housing supports through the Safe Park program. And the other is continuing to provide emergency social services, which can easily be confused with an emergency response. And this is intended to capture more so assisting individuals in navigating provincial systems to access individualized support through, say, Alberta Works or Alberta Health Services, etc. So that's what that's intended to capture there. And then childcare, programming and sector support. So this captures staff time dedicated to working on childcare or supporting the provision of childcare in the community, which is a provincial responsibility.
I have a question. Thank you. Just in regards to the funding model changes around FCSS and Family Resource Network, do we calculate into this the amount of time, additional time it takes to report back to the province on their requirements as well?
No.
No? Okay.
Yeah.
These next two items are two big ticket items. The first being provincial education tax. This really has huge consequences on livability for the community. So we'll spend a little bit more time just going into detail, just making sure folks understand. Ms. Gibbons, please feel free to join in as well if you want to add anything. But really, all property owners are required to pay education taxes. The government of Alberta determines the amount of revenue required from municipalities for K-12 education system and bills those municipalities for their share of that total. The local education tax is really calculated at a very kind of simple, high level, I guess, oversimplification. The education tax rate is based off the municipality's education tax requisition, as well as the total assessed value of all properties within that municipality. And really, due to our high assessment values, property owners are disproportionately impacted when compared with other municipalities in Alberta. And that's an important piece to know when we talk about livability within our community. There was also a change in 2013 where the provincial government eliminated a previous cap in the formula that really limited education tax increases. And I think we go into a little bit more detail about that in the livability report that's included in your package for later today. This is a graphic that was included in our tax slips that went out to residents this year. So really what you're looking at is based off the median assessed value of a single detached dwelling in our community, being $1.482 million. You can see a pretty significant amount of provincial education tax and kind of what's coming out of that monthly contribution by that resident. Also, when we look, this was as well, this graphic was included in the same slip. So this is a year-over-year tax breakdown based off that same median single detached dwelling. And what you'll see is that from 2023 to 2025, there has been a significant increase in that provincial education tax in terms of the overall proportion as well. And Chelsea, did you want to add anything?
No, I think that covered it all, but happy to jump in to help with any questions on that.
So, I don't know why this didn't occur to me in past years when we've included it. No doubt, you know, and I see the rationale for including it because it is money out of Canmore taxpayers that go to the government, but it's not money that is collected through the municipal portion. And so one of the things I have to, so I'm actually okay with it being there, but one of the things that I need to adjust is I've never subtracted that out. When I talk about X number of dollars out of your municipal tax bill go to cover provincial downloading, I shouldn't include that because that amount is included in your education portion of the tax. So if we look at the very bottom, just as an example, at 10.6 or 10.7, and this is about 3.5, then really we're looking at 7.2 million is in the municipal bill that we're collecting. The other 3.5 is in the education bill. So that's just a nuance that it will be a difference than what I've done before. Everything else is with regards to the municipal portion.
Can I just, I understand what you're saying there, and I don't disagree. I think historically, previous councils have felt that that was tax room that the municipality could move into if right? And so while I understand the principle that it's not a download, it does impact your ability to tax for municipal programs and services. So what we could do with an additional whatever you said it was, $1 million is actually quite a lot on an annual basis. So yes, not downloading, but I think what might be important as you think about that messaging is also the impact.
Our projected is the tax this year, I know we're going to cover it, is it about $50 million that we're collecting in taxes?
Yes.
Yeah, so if we're looking at 7.5, I mean, we're roughly at $1 in $7 is or 7.5 or 7.2 out of 50 is roughly 1/7. So 1 out of $7 we collect for municipal tax goes to downloading. And you could do a same sort of a thing that's taking up space for us in the education tax, although I don't agree with the philosophy that there's room there because we're not taxing it. I mean, it's still, I fully acknowledge previous councils have regarded it as room for taxation well in the past. But just a heads up, if you're using the total number about amount we collect in municipal taxes, you shouldn't it's not 1 out of $5, which if you took 10 million out of the 50, it's actually 1 out of $7 because it's 7.2. So it's just a nuance, but I just wanted to raise it at this point. I'm fine with it being included because of the rationale given. It's definitely an impact on our taxpayer.
Yeah, great discussion. It's also worth calling out that the collection of this is also piggybacking on our administrative costs. So we are collecting this on behalf of the government. So there is an administrative portion as well that could be considered downloading. This is one of those reasons why the traditional term downloading, we're starting to feel that really there's a lot of consequences to decisions, with higher levels of government. And ultimately, our taxpayers are kind of bearing that cost.
I just have a question, and I may be reading this incorrectly as well, but when we look at the education tax just on this spreadsheet, so it's showing, what was that? Financial impact 24, 25, anticipated 26. That's actually showing it going down. Like those numbers are, so 5.5, 5.4, 3.4. I'm just wondering.
I think sorry, I'm just
If I can, I just
furiously
looking
trying to
for
catch
a bit
up.
of clarification, I guess, as to.
Yeah, I think what I actually put on the sheet is the year-over-year increase.
Okay.
And so it was hard to capture what exactly the right number, again, trying to make it work within our existing spreadsheet and be comparable to the other impacts.
Okay.
So I think what I've used, and I can't remember if I added that language in there, but was our anticipated impact year over year. So we do have our equalized assessment number for 2026 already. So assuming the province doesn't increase the rate, which also would drive further impacts, but just based on the increase in our assessment alone, that's the projected increase. So sorry, it's a great clarification. Each year, the financial impact is the anticipated year-over-year increase from the previous year's requisition. And really just trying to capture there that Canmore residents are getting it twofold, the increase in our assessment, and then any increases the province tax on top of that.
So just to clarify, shouldn't the amount included every year be the difference between the amount collected in Canmore and the amount that is returned to the school board but modified for the Canmore portion, which I know is difficult to get? But that's really the difference. If we knew, because the school board covers more than Canmore, But if we knew that, that's the formula that I would think was there. Difference collected versus what's sent back.
You're talking, yeah, the difference between what's collected from our community and what comes back to our community. Yeah, I think there's nuance there. I mean, I think what I was more capturing here is the impact on overall affordability because of our really high assessed values, that Canmore is essentially subsidizing the rest of the province to a certain extent because of the calculation. I agree, if we had a reliable number for what came back into Canmore, which I think in my whole tenure here we've been trying to get, and I've never really found a reliable way to capture. If that number became available, I would love to change it to that formula. I just don't have that other piece.
Right, because I think that the actual impact may be higher
Yeah.
than
sure.
what we're showing there, yeah. Okay.
Any other questions or discussion before we move on?
So if, I'm just looking at education taxes as a percentage of total taxes that we collect, looks like we're moving into that like 60% education tax?
50. Yeah, there's a chart later on in our, it's in the report.
So are we basically saying whatever that percentage is, and the cost that it costs us to collect taxes in general, we're charging that 60% as a downloaded cost for collection? Is that how we're calculating that one?
Sorry, I might need to understand your question a bit more because my brain was going two different places. So it is 50-50 roughly. Overall, there are subtle nuances. The requisitions we get from the province are slightly different between residential and non-residential. So it's about 50-50 when you look overall. But why this one isn't exactly 50-50 is because of the difference between residential and non-residential. We get requisitions separately for those two pieces. So sorry, that was the first part, but I think you were asking something different after that.
And then, so how are you calculating the cost of collecting the education tax?
So we don't. This was really, if some of you have been following recently, City of Calgary actually invoiced the province because they use our municipal tax collection as the mechanism to collect the school tax. And Sally, I can let you take over.
You're doing great.
So because that's just become a subject of conversation provincially and the province using those municipal mechanisms, this was a new year addition for us to actually include any amount on this spreadsheet for that. It wasn't something we previously considered and was in response to those conversations. We don't track the costs separately, so I would say there's a lot of simplifying assumptions here. Really, I've looked at what I would roughly estimate. We don't do activity-based costing, so it's some rough estimates, but if I was to estimate what tax collection cost for a municipality and split it 50-50 based on overall 50% of the dollars are for our municipal budget, roughly 50% are for the provincial education tax, I just split our costs of tax collection, again, very roughly 50-50.
Thank you, Chelsea, or Ms. Gibbons. The only thing I wanted to really clarify is that we, in almost no departments, do we track work hours financially, right? So we don't do that kind of accounting of how people spend their days.
Right.
Except in very few cases. So there's a ton of assumptions. And it's not something we're able to provide.
So just to add to the conversation, and I appreciate how it's the rationale to come up with a number, and I don't have a different way to do it. But my question goes to actually whether or not we should do it. I know that Calgary sent an invoice. I actually disagree that there's an extra cost or any significant extra cost to the town over and above what we do. If the province took this back, I suspect we would still have very close to the same cost to send out our municipal tax form. So I think it's more of a political statement more than effectively a download. Correct me if I'm wrong, but I mean, the amount to add on to the same sheet that we're sending out is probably entering in a number, and we're told the amounts. So, I mean, like, is it really a lot of extra work?
I mean, it is an additional rate that we need to calculate. There's over-unders every year. There is additional administrative work associated with administering another rate that is time on the finance team's side. More recently, we've also had more comms involvement about trying to make that distinction between what is our municipal piece and what is the provincial piece, because of the magnitude of it, we've invested more of our time in trying to make that clear to the community. And I will say, tax and utilities is part of our finance portfolio. When we get calls from residents about their tax bill, they're looking at their total bill and not that breakdown. And so there is additional effort on the team side explaining, and it's especially hard when this current or former councils have really worked to keep tax increases low, and the big increase in their bill is driven by the province. It's our team that's actually fielding those phone calls and trying to provide correct information, explain where they can get more information. So there's a little bit, I appreciate the point. I will say there is additional work that our team does because we collect it.
I think excellent points around the communication and around the extra work. I don't know if it relates to a dollar amount though, because we would still have those positions, presumably, whether or not we received the calls. And there would be some extra cost with the rates because of people's time, but would we actually have an extra cost?
I mean, I do think there is some extra cost. The question is, it really is just that it gets hard to quantify. So I think your point is a good one. It's not 50-50. That's artificial, based just on the number of the way our taxes are split. But it's not, I think to Ms. Gibbons' point, it's not just entering a number. It is actually more complex. And the other thing that gets harder to track is some of those calls are less than polite. And there's a whole other impact on staff from those kinds of things. That's not to say the province is responsible for that either. I guess I'm just trying to highlight its nuance. So if we weren't collecting education tax, I think to what you're raising, Mayor Krauser, would we eliminate a position in finance? Probably not. But would finance be freed up to do other work? Absolutely. So this gets back to what I was trying to say before, is that we don't measure, we don't track time in a way to answer that fully. So I think this is a good question for Finance Committee and ultimately for Council in terms of direction at a future meeting. You may ask that we remove that line or characterize it differently, and I think that's a fruitful discussion for you folks to have, and let us know where you'd like to land. We included it this year because of the larger conversation happening in the province, but it's really up to you to determine how you'd like us to show it, or if you'd like us to at all.
Thank you. Tanya?
I think that we're really getting into that area of, I think we covered it in orientation, where we are an administrative arm of another level of government. We're not our own level of government. And so I think the nuance for me would be, when are we tasked as an administrative function of the provincial government, right? In this sense, we are tasked to collect taxes for them. And that, right? It's not so much a downloading in the sense as it is that we are being tasked to do a job at the same time we're doing our job. I don't know if that helps at all, but that's exactly where my brain was, and I wanted to share it. Thank you.
And thanks for doing that. We could have another, well, I recognize we're creations of the province. I think the point was also made that if everything in the world went into chaos and everything fell apart, there would still be some municipal governments required at a local level. And so we are very much an order of government, whether or not we're recognized.
Awesome, thanks. Great discussion. I think it is important to note just, why this is such an important concept to bring up in this specific presentation, is ultimately we're not the ones that are making this calculation. We're subject to, or our residents are subject to changes in this rate. Our citizens are, disproportionately impacted by the high assessed values in the community. And then ultimately we are taking on a burden of both collecting these funds and also all of the communication associated with that, and just ensuring the community understands what portion of the tax bill is actually being set outside of our control. So those are all just important things, and how we track it can change depending on direction, but definitely a worthwhile discussion. So this is the local government fiscal framework. It's a funding mechanism providing municipalities with capital infrastructure and operating grant support. It did replace a historic municipal sustainability initiative, which previously provided provincial granting to local infrastructure. It also included the removal of an education tax contribution as a formulaic input, and it is based off permanent resident population, which is another important piece for our community. And it doesn't include any infrastructure funding, again, for the non-permanent residents. So again, this is an important piece for our community. Overall, the result is significantly lower funding when compared with the previous MSI. In 2024, the allotment was 64% of the 19-year average. And then for this year, it was 55% of that average. And next year, it is also expected to be lower, and I think the lowest since 2009. That's correct, yeah. Okay, moving on to provincial requirements.
So when we talk about provincial requirements under the category of enforcement, this has been relatively static year over year. There were some changes to traffic reporting system, I guess upgrades that we had to implement, which we did, and the AFRAC system, Alberta First Responders Radio Communication System, also implemented. So those were passed but remain on your sheet. The training, the cost and availability of community peace officers, I mean, we talked about it in the budget variance discussion, just the slippage with community peace officers, in part due to the lack of availability of training to certify new peace officers. And then we continue also to enforce provincial legislation, namely weed control and the agricultural pests acts. So those are fairly static but remain on the sheet. Notable provincial requirement change related to our wastewater treatment plant, detailed on your sheet, where there's revised requirements, which means we're required to upgrade our plant. So costs for that are $850,000 in 2025 and $2.75 million in 2026. So a significant impact there. Oops.
Thanks. So this, Ms. Gibbons had mentioned this in the new council orientation. This is really an important piece of information for council to be aware of. This has not currently generated a real tangible, I guess, cost in terms of provincial downloading, but it has great potential moving forward to significantly impact our ability to secure grants. So this is the Provincial Priorities Act. It was passed by Alberta's government and really as a mechanism to respond to what is referred to as federal overreach in terms of our provincial policy. It came into effect of April this year for municipalities and really designated just that we have to essentially submit and be granted additional permissions from the provincial government in order to receive federal funding by way of grants. There are different criteria in terms of the level, I guess, of approval that is required. So for anything that is under $100,000 in total value, submission only. So just, a clerical effort in terms of submitting the grant to the provincial government. But when you start to kind of go incrementally higher in terms of total value, you actually require formal approval. So anything between $100,000 and under or up to $5 million actually requires minister approval. And then cabinet approval is actually required for any federal grant greater than $5 million. So something that's very important to note, that this piece of legislation has a significant potential to really generate, I guess, future reporting on provincial downloading. Go ahead.
What grant applications do we have over $5 million right now? Anything?
I don't think we have anything at the moment.
The flood mitigation program would be over that. I mean, it was in place prior to this coming into effect. But I will say we needed, it also includes amendments to those agreements. And we did have an amendment to, I believe, the federal grant that we got through. Like, it got approved, I think, only within a month before this came into effect.
And then any sort of like half funding would kind of, might fall under that as well.
Depending on the amount.
Yeah. Okay, thanks.
Yeah, and I'll just kind of add as well that these total values are for so if it's a multi-year grant, it's the total value. So it's not just an annual basis, but it is the way that it's been structured, it's a big administrative burden. And it's also, if you think about all the effort that goes into getting and securing a grant, it's a big risk in the end to actually having those funds and all those efforts removed as well. So definitely something to be aware of.
One more for you. Have we seen, has the province denied any federal grant applications to date? Does anybody know?
I have not heard anything personally. The most recent I've heard is actually just messaging from the province reminding us that this is a process. So I don't know if maybe they're having some trouble with folks actually adhering to this new process. But I have not heard to date of anything being rejected.
Thank you.
I'm not following it closely, I will tell you that, yeah.
The amount for the wastewater treatment plant, is that actually collected through utility rates? Right, okay. And presumably that there's an amount worked in there for the wastewater treatment plant upgrades that's actually collected over the whole period of time, as opposed to the amount that was actually expended this year. So the amount actual collected through rates is probably an amount, some other amount. Okay, I don't need real details right now, but I just wanted to make sure it was through rates. Yeah. Yeah, perfect. Yeah, thanks.
Okay, so then we move to impacts from lack of provincial resources. And a few impacts that we see are related to wildlife management, whether it be the feral rabbit management, which is no longer required. It's been removed from budgets. And what we continue to see, though, is when there are wildlife conflicts within the municipality, it's often municipal resources that are required to manage those conflicts based on the availability of conservation officers and or fish and wildlife. So the cost estimate there is approximately $15,000 a year, depending on call volume. We also, with Council Motion 170-2022, are reporting back on EMS costs related to lack of, or I guess, a service level that the province provides there. So annually, about 40 to 50% of Canmore Fire Rescue's calls are medical in nature. They go to quite a number of those. Many of our staff maintain an ALS, or an advanced life support capability, through their previous work when we were an integrated service providing both EMS and suppression. So there's some cost related to that, $22,000. And in 2024, we had 429 medical calls, and then used our master fee schedule rate of $859 per hour for a pumper or rescue truck, assumed approximately an hour per medical call when it comes to taking that truck out of service, doing the work on the call, returning to the hall, and then deducted what we received in 2024 under the MFR, the Medical First Response Grant Program, of $30,000. So that brings us to $338,511 is what we estimate that cost to be. I will say that through some work with Kananaskis Mountain Rescue, we've been able to bring down the frequency with which Canmore Fire's response to the river. So that downloading cost has gone down as a result of work between the two organizations. Seeing questions there. What's that? Okay. Under the homelessness category, there is no rural homelessness funding, and yet our staff provide a lot of assistance to those who are experiencing homelessness or are housed unstably. And that staff time is estimated at about $26,000 per year. We also work closely with the Homelessness Society of the Bow Valley, and we were acting as their fiscal agent. The staff time associated with that was approximately $10,000 per year. Great news for that society is they've, I guess, reached charity status, so we're no longer acting as a fiscal agent, but had significant investment and assistance to help that society be able to be eligible for other grant opportunities on their own. So a success story there, but also a download.
In terms of affordable housing, so I think most folks know that the town of Canmore established Canmore Community Housing, or CCH, in the year 2000 to provide housing solutions for a healthy and balanced community. And you can see the requisition over time, fairly stable, and it has been increasing over the last few years. And this does not include a recent loan that the town issued, close to $9.5 million to CCH, really to be able to secure the majority funding for a large-scale non-market development, being 100 Palliser.
Dustin, why didn't we, oh, sorry, I keep forgetting that we're going to be more formal today.
You're good.
Why aren't we including the lost income on that $9.1 million?
There is a nominal interest rate on the loan with CCH, so how close it approximates what we would have invested if, or what we would have made if we'd otherwise invested it. We just didn't feel like was material for inclusion here.
That's fair,
there is
yeah.
some interest on it, but it's definitely beneficial for CCH through us.
So there would be a difference in what we're getting from them versus what we get in the market, and it's not
Probably pretty nominal.
very material. Okay, thank you.
Yeah, and I don't think we have like a lot of opportunity costs framed in these as well. So they're just, you know, and that's why we're trying to just really pull in the important concepts to be aware of. Whether it generates to like, you know, a super precise dollar figure becomes quite difficult, yeah.
Yeah, I thought, you know, $9.1 million, the investment opportunity on that is significant, so, but if it's different, thank you.
Absolutely, great question. Some other things to be aware of are just this current provincial government has been quite active in terms of updating provincial legislation. And all of those updates do come with downstream costs to municipalities. So there are significant administrative burdens created through the constant change in policy. So, you know, an example would be just updating our bylaws and policies to basically strike out all reference to council code of conduct. But there's also the administrative burden of, you know, implementing changes that are legislated, like the actual manual counting that was required this election. I think one of the figures that's been reported in terms of the election costs is about $65,000. So it is quite steep. And this was another thing that's also reported. So really, this just speaks to some of the livability struggles that are unique to our community. So the economic impact of tourism and those impacts on our infrastructure and the lack of a real clear, tangible way to be able to directly support that strain on the infrastructure. There was a previous analysis in 2021 that estimated the infrastructure strain of tourism locally as about $15 million per year. That hasn't been updated since, but it is being reported as well. So when we take a look at all of the different financial burden that really our taxpayers are experiencing, it is worth noting that there are those costs of downloading. Some of them are more tangible than others, but there's also the cost of tourism on our infrastructure as well. And if you put those costs together, the combined financial impact on the community is quite significant, just, peaking over 25 million annually. So just see if anybody else from administration wanted to add anything, or if there's any further questions.
Yes, so or is this the end of that presentation?
This is the answer. I'm just flipping. Yeah.
So I think that that's fantastic. Those are good numbers to know. But now it comes to, what do we do about that? And we've been collecting this for a while, and we've been whining and moaning and complaining, but we haven't been doing much, in my opinion. What can we, or what should we be doing, or what can we be doing? I guess I asked that to all my colleagues.
You've asked this before, and I've answered it before. And I don't know if you're expecting some sort of a magic trick that will get these numbers and it will change things. We provide these numbers to AB Munis for, so that they can, they're calculating the total cost of downloading across Alberta. Mm-hmm. We actually were at the leading edge of that, and it was actually, I believe, Canmore sharing that we were collecting it with AB Munis that actually sparked a conversation and sparked that happening. So our little community in the big hole got that rolling because we're doing this. And then we are reporting there. So that's item number one. Two, we've been using it as part of our communications with regards to our own residents to explain how a portion of their taxes is because we're covering costs that would otherwise or should be covered by the province according to split of jurisdiction and that sort of thing. So that's number two. The third thing that happens with regards to the tourism dollars is that we constantly have been using that number in conversation with the province as to why we should be treated differently. Now, that conversation hasn't been successful yet, but the number is still valid. About 25% of our costs are tourism facing, is what this report says, and it's a higher number for Jasper and almost 50% for Banff. So there's use of these numbers. We can't just send a bill to the province for this, because then that just becomes political stunt. And I don't think that that's an appropriate use, but some would use it that way. I would very strongly oppose that, because there's a lot of nuance to these numbers too. So anyway, that's the answer we have. I appreciate that they're being gathered. I'm going to be actually sending an email to council with some other calculations that may be helpful as you're talking to residents, or may not. Because, actually further to what I was saying before, we also have to back out things that were gained by the utility. They're actually not in the municipal tax amount. So it's actually closer to $1 in $10 is the amount that would go to provincial downloading. But our utility bills would be lower if we didn't have one. Our education tax would be lower if we actually covered the cost of our local. So there's a lot of information that this provides to us in helping to others to understand why their taxes are where they're at. So both internally and externally, I believe that while there's nuances, this information is very helpful for us. And it also will help feed maybe individual conversations, whether it be around FCSS, whether it be with regards to ambulance deployment and those sort of things. We have those numbers available to be part of either our own advocacy or part of group advocacy otherwise. If you have some suggestions of how they could better be used, then please let's talk about that.
I recognize I haven't been waiting to be called on. I'm sorry. I'm just not good at the open mic thing. I'm trying. Plus, I feel like I have to be like Mr. Cotta. The other thing I'll just add, in addition to everything that was just said, which I agree with, is that I would encourage recharacterizing. I don't think we whinge and complain. There are some things about the policy changes at the province that are frustrating and, excuse me, and put us as a municipality in a difficult position. That's true of many municipalities, but it's not meant to be whinging and complaining. It's meant to try to tell, our situation is complex, as are many municipalities. And it's even more so true in Canmore. We have even more nuance than many, we're special. Every community is special, but there are nuances here. And so we're not doing it to complain, we're doing it to try to tell a complex story. And later in the agenda, when we get to the livability tax, in part, I believe the livability tax was brought forward by the previous council because of exactly this nuanced story. And so I think it is influencing policy decisions and an important feeder in terms of a bigger picture story. So maybe there's a misalignment of expectations that we collect this and then we submit it to someone and something is going to change. I think what we're doing is collecting it to tell our own story and then making decisions when the outcome we hope from the province doesn't come. We're trying to solve our problems ourselves. So that's how I see it being used, for what that's worth.
If we're going in order, I just, for myself, having brought forward the motion to create this process and the fact it's the doing. The collecting of the information is the doing. You don't then take the information and then do stuff with it. The very effort to measure and collect and examine and put a lens on the level of financial support that we're getting from another level of government and how it changes over time. That is the doing. And the power comes from the fact that organizations like AbMunis have also asked municipalities to do this work as well, so that collectively, as across the province, we can go to the province and say, not just Canmore, but every municipality, and we can put those full numbers together. And if you've been following AbMuni's social media, they're in the middle of actually rolling out that marketing and communications program around the power, like what is your tax dollars in Alberta actually doing for you? And that's messaging for all Albertans. So that's really, so what we're doing when we do this is we're contributing to that as well. So I think it's really valuable, and I don't think it's complaining. I think it's data. Thank you.
Thank you for all of those answers, and I apologize for minimizing the work that we have done. That wasn't my intent, but I appreciate that those answers are fulsome, and they are what we are doing. I think there are also moments in time where we cannot accept some of the downloading. There is opportunity for us sometimes to push back and say, no, that's not something we are going to increase. And those are conversations that we do have and will continue to have. So, thank you.
And thanks for your amended comment. I really appreciate that. As far as there's a lot of things that we'd like to say no to, but you actually can't just say no.
Sometimes.
Well, you can't. I mean, the law, we have to follow the law, and the law is set by the province. And so it's not as simple as just saying no. Yes, we can register our concern. We can advocate for a change, but to refuse to pay something, which is essentially saying no, actually does more harm to us than good. Councillor Murray?
I just want to make sure this conversation was done. Thank you, Mr. Mayor. If there's anything more, because mine's a separate topic.
Oh, yes, thank you.
Okay, thank you. First of all, thanks to the staff for taking the time to put all of this together, and a big thanks to everyone here at the table for that conversation we just had, which answered my first question. My second question, and I kind of feel like a bit of a dog with a bone with this one, going back to the LGFF, you mentioned that it doesn't recognize non-permanent residents as part of the funding model, but there are exceptions to that for certain areas of the province. The shadow population count for places like Wood Buffalo and Grand Prairie County, and really specific for oil sands workers in the part-time population there. So if there's exceptions within the framework already for non-permanent populations in other parts of the province, I mean, I'm just wondering if it's ever been a conversation with the province to have those kinds of exceptions for our tourism-based non-permanent population.
It has. We were heavily involved when the LGFF model was being created. We were heavily involved in giving feedback and just haven't been successful. The communities you mentioned have special exemption more because of the high industry-related tax. And so less about tourism and that industry, and more about oil and gas and other extractive industries, or energy-related industries. So we tried when the formula model was coming together. We haven't revisited it. LGFF, Alberta Munis, and RMA, or the Rural Municipality Association, were both tasked with working together to come up with an agreed-upon model. They couldn't agree. Ultimately, it went to municipal affairs, and the minister, was Minister McIver at the time, finalized the model and rolled it out. So we did what we could to advocate. It wasn't successful. It doesn't mean we can't continue to try to advocate to change that, but the province to date has been very reluctant to make one-off changes for one community. They tend to not like policy that does that. So.
Okay, thank you.
Yeah, it is something, though, that's a very interesting topic, and my thoughts on that are, if you ever wanted to put together those stats and make an argument and bring it to council for a discussion, I think that'd be an interesting discussion with the potential outcome of directing the mayor or the town to advocate with respect to our population. That's, so it's, thank you for bringing that up. That's good.
Thank you, Mayor Crozet.
Yeah, I did want to just correct something, and it's just, these two motions, Councillor Faubert and I actually tag team. Councillor Faubert brought the motion about the fire delivery, and then I brought the motion on the downloading, just because that was very topical at the time, and it resulted in, I think, what has been a very good process. So.
Awesome, thank you. We did try to use our least whiny voices, I promise you that. So I did realize while we were standing up here that it's a good thing that we weren't right after lunch, and that there's an opportunity for us to start a side hustle reading kids' books and lulling children to sleep. So
Mr. Shinbite's showing his range.
yes, exactly. But thank you.
Okay, so thank you for that. Very full part presentation. Now, I'm just wondering about time versus what we have next. Should we get partway into it and then take a lunch break? Should we take a lunch break now and then start fresh afterwards?
I think my preference would be to not get partway through. I think it's a hard conversation to pick up. If we wanted to take care of one more item before lunch, I'm assuming your time, you'll need more than 15 minutes.
I mean, unless there's absolutely zero questions and I
let's
do it
not
very
risk it.
quickly, no, I would say not
I don't think that
possible
would
or
be a good bet with
likely.
this council. We're very inquisitive.
It doesn't, exactly, not good odds. But I know that I can get through D7 quickly if we want to jump ahead, but I think it's also fine to jump, to go to lunch, however you want to go about it.
People's thoughts, it's also been one more. Okay. All right, let's do, so D7,
Oh, thanks, Rick.
the operating budget, option government relations.
No,
Pardon?
just questions.
Yeah.
Yeah. But thanks for being ready. Oh, where did I put it? thought I had it open. Here we go. I'm not at F8 yet, but I'm gonna use it. I love F8 and I'm gonna use it when I get there. If they're, depending on questions, the presentation itself does not need to be. Thank you for checking that. Duplicate. I just used F8. Okay, appreciating this is a little bit out of sequence because normally we would give you the high-level picture of the operating budget, excuse me, and then an option, but for the sake of time, we're gonna go into the option. So one of the options for Finance Committee and ultimately Council to consider is the addition of a government relations position in the 2026 budget. So as a bit of background, the amount and complexity of the engagement with other levels of government is increasing rapidly, particularly with the province. I lost track of the number of engagement sessions that the province of Alberta has held this year. We did our best to get to them, but there were a few we just had to miss because we don't have enough staff to attend them all. Or we don't have the right expertise. So they're doing massive amounts of engagements with municipality on a wide breadth and depth of topics, and we have trouble keeping up. In the mid-sized cities mayor's caucus group, Canmore is the only community without a dedicated government relations position. The group of staff in each community, especially on the executive of mid-sized cities, meets monthly, and they've started inviting me to attend the meetings because they recognize it's important for Canmore to be there. And to date, I have been able to attend 0 because of other obligations and workloads. Yeah.
So I just want to add, because I haven't sent around the introductory letter about mid-sized cities, there's 24 municipalities representing about 1 million people total. So it's
generally
and
communities.
we're not the smallest.
No, we're not the smallest, but it's generally communities about 20,000 and up, with Canmore and Wetaskiwin, I think, and Sylvan Lake, maybe. There's a few exceptions.
Yeah, there's a few that are below that. So we're one of the smaller ones, but still, yeah. Thanks.
It's also a different political environment. We're seeing local policy decisions being opposed by well-funded groups who are lobbying the province and ultimately being effective in terms of affecting change at provincial policy level. So over the years, Canmore has hired government relations firms to represent our interests in very specific items and often in very reactive ways. So if there's an issue, we've hired and worked sometimes with other communities or on our own with a government relations firm. But in the changing environment, there is clearly a need for ongoing engagement, and we are behind. We're lagging from other comparable communities. Right now, any government relations work is done side of desk for existing staff, and we don't have anyone on staff or in any position with subject matter expertise. So we've got no real knowledge and limited capacity to be effective in intergovernment affairs. So there's an opportunity in that there are a number of existing intergovernmental relationships that would benefit from some internal guidance and expertise. So again, the numerous engagement sessions on a wide number of topics, proposed legislation, changes that could have an impact on municipal government and Canmore, complexity in provincial politics, and the involvement of different interest holders. The federal government is also changing quickly. New federal budget. It's hard to know what's coming from the federal government, but there's potential for a lot of opportunity there. The town would benefit from analysis and recommendations on how to take advantage of opportunities. When those of you who are going to Alberta municipalities next week, you will see that some other communities, before they go, councils get a report from their intergovernment relations person highlighting key resolutions and with some background or in position for council to consider when they vote, and that's a service we're not able to provide because we just don't have the resources. I believe administratively we would also benefit. Last year many of us were at FCN, and again talking to CAOs from other communities, their intergovernment relation person sets up meetings with ministers in advance. If you bump in these and look at who's attending the conference, encourage you to find people, give you key messages of what to talk about when you're meeting with them. All those types of things are just a level of sophistication that we don't have. We're also having to spend more and more time negotiating agreements with other communities, particularly the MD of Bighorn. They're just getting more complex and nuanced and time-consuming. We have to complete a joint use planning agreement that has no real home in the organization. Right now it's sitting in the legal department, when the town's lawyer contacts someone to negotiate agreement, kind of changes the tenor and the nature of how people initially react. So we're having to get over that. It doesn't have a natural leader in the organization. The mid-sized cities' involvement has increased significantly in the last term, and I believe that that's really good work. And again, when the mayor and I go to mid-sized cities meetings, most other communities bring 2 staff, the CAO and the intergov person. And then council and senior admin, again, I mentioned the prep for various meetings and conferences. So the financial impact of a position, I polled the previous mid-sized cities executive, which is Spruce Grove, Cochrane, Grand Prairie, Sylvan Lake, Airdrie, and Canmore. All those communities have a position, and got their salaries from them, and then worked with HR to create a package around this ask. So 219 includes salary, benefit, and an operating budget. It's equivalent of a 0.6% tax increase. And there is, we could just put in salaries and benefits and then work with the existing budget that we have in the CAO's office. But I believe this position actually needs a bit of an operating budget. So to be clear, 219 is not just salaries and benefits. It actually includes a fairly good operating budget, for things like their computer and desk and all those things. But also, this position will need to travel to meetings in Edmonton. It'll need to attend conferences. So it would includes money for education, travel, and the workload that we believe would be associated with it. So I also want to just acknowledge that and be transparent that the timing of this is unusual. There are no other new positions asks in this budget, and our plan had been to include this in the next 4-year cycle. But honestly, given the changing political landscape and missed opportunities, we made a decision at CST to put it in front of you now. And we did also share this with managers. I was transparent that we were doing this outside of normal practice, and wanted them to be clear about that and answer their questions. And the room was very supportive. The management group all is in agreement of this coming forward. So that's really all that I was going to say. I'm happy to answer any questions if you have them.
Thank you, Dr. Cottle, for that presentation. Thank you, Mr. Mayor, for giving me the floor here. Just off the top, I'm generally inclined to support this kind of direction. I really believe that relationships are really key right now, and the one with the province, there could be some work done there that could really provide a benefit to us here in Canmore. And also from the standpoint of being an outlier in the MIC, is that how we say the acronym?
Yes.
Yes.
So I've got a couple of questions. Sure. So I realize the 219K salary there. Would that position take over any current staff time being allocated to other things that would maybe offset a little bit of that in some ways?
I don't believe that there's any offset. I think what it would do is just simply free up capacity for other things. Right now, it's my time. There's time of CST members, some managers, our town solicitor, and folks in the communication department. Am I forgetting anybody? I think those are the big ones.
And some of my time that would be better utilized actually having the conversations than trying to arrange them.
And be organized for the conversations.
Yeah.
And Miss Jones.
Yes.
So I don't believe that there would be cost savings.
Right.
It's more that we would fill in what we're not doing currently, and then where we are trying to fill the gap, it would free folks up. So our communications team has spent a good bit of time on this in the last year. They would be able to switch that to a different campaign, but there wouldn't really be any associated cost savings.
But it's an intangible offset, for sure. My other question would be, I'd be very curious to see sort of a more detailed job description of like what this person would actually be spending their hours of the week doing.
Sure.
Yeah.
I've already created a job description that I can send to you. Council doesn't approve job descriptions, but I'm happy to share it so you have a sense of what's
Yeah.
in there.
Mhm.
Absolutely.
Perfect, thank you.
And just for clarity, before getting to other questions, if anyone's interested in moving this forward, which I am, the way that this is done is on November 20th. That's when we bring forth motions, and that's when we would have debate about. So great question, and presumably that job description will then be circulated just for information that could help inform that discussion. Okay. Yeah, and you're done with your question? Okay, Councillor Marin.
I believe Councillor Graham was
Okay,
next.
thank you. Councillor Graham.
Thank you. I'm wondering if Indigenous relations would fall under this intergovernmental in that realm as well. I didn't see that in here, but
Yeah, I mean, it could. I actually think Indigenous relations is really its own special subset, and that the priority for us would be more on other levels of government, particularly provincially and conferences. But it's something we could look at. It's added in the position description as some additional potential. It's not where we would start, but it could be part of it. Yeah, it could be part of it. It's kind of unknown. I mean, I do think if we continue on the same level of growth and trajectory we're on, there will come a time when an Indigenous type position is its own job description that's put in front of council. We're just not quite there yet.
yeah, I guess, I could see this position having some interface
Yeah.
with, the Stoney Council and Stoney administration.
Yep.
Thank you.
Councillor Marin.
Yeah, thank you. So you just, it says that we've hired government relations firms in the past. Do you have a number for that as far as like a dollar amount? Like what have we been paying for firms in this area that I'm assuming this position would replace expenditure of hiring those firms?
Yeah, it may not. We may still need to actually to hire a firm to do specific campaign work. That's what many communities do, is they actually have an intergov person, and then when there's a specific issue, they actually work with a firm to do that. It's helpful sometimes to have people who are located in Edmonton, in the legislature, who have daily FaceTime. Right now, the budget, council's budget for this line is $7,500. So it's tiny. We wouldn't actually recommend reducing it. We're currently working with a firm right now, and we'll be spending more than that. And in the past, a lot of that work was shared with Banff and Jasper, which is how it was able to be a smaller amount. But when it's discrete and on your own, it actually, so similar, I don't think there'll be a cost savings. In fact, similar to other departments, we may actually see more ask, right? When you get people in a role like this that hasn't been covered, what we've had in the legal department is a great example of that. Then suddenly it's like all these things get uncovered, right? And so I don't think there would be an offset in a reduction. And if there was, it would be small. I think what most communities that I've talked to do who have this position is they pay for the salary for the position, and then again, issue specific, they work with a firm. So instead of constantly working with a firm, they reduce their budget in that way, but we haven't been working constantly. Ooh. Generator testing?
No, they're switching over.
There's work being done in the building. Everything's okay, except maybe
That was
Jen
a
and me. Anyway, I'm babbling. I think you get my point.
Yeah, thank you.
Yeah, great question.
Yeah, just to add to that, I think that there's an element of, as a community gets larger, things, you need to expand some of the services because you do more things than you used to. And I see it kind of like a town solicitor type role where there's some things that they'll take off people's plates, but there will still be, we still bringing in external legal deal with
Time to time, yeah.
specific items. So, yeah, great questions. Councillor Murray.
Sorry, thank you, Mayor Crozert. Just one more question that I thought of here. I'm wondering if, in your conversations with the other municipalities as part of this group, if there's any tangible success stories about maybe a specific issue that this role advocated with the provincial government or worked with the provincial government and actually made a difference or saw some success?
Yeah, I think there's several. So several communities feel that it helps them with a variety of different advocacy points. So I'm thinking even something like, for example, your LGFF question earlier. All the communities you mentioned had intergovernmental relations staff directly reaching out to the province on those types of things. We participated in the overarching advocacy, but we didn't have anybody on the ground in the minister's office when those decisions were being made. So it's that type of thing.
Right.
Yeah.
Oh, thank you.
Okay, let's, Ms.
Yeah,
Smith?
just because of the changeover of the cooling system, and they have to do some work inside related to welding and stuff, so they were trying to limit it, excuse me, to between noon and 1, but I just wonder if maybe this is a good time to
No,
take a
I
break,
was just
because
about-
this
I
will
was just
likely
about to
continue
say
to happen
we
off
take a
and
break
on.
for lunch. Thanks. Do you have anything else?
Nope.
No, okay. All right, so let's take a break for lunch. It's just after 12. Let's make sure we take our full hour. So let's get back here by 5 after 1, all right? Thanks.